Hey, hello, and welcome to EML.CON's Open Banking panel. I'm Brian Hanrahan from Nuapay. I'm delighted to be joined today by three real leaders in the field of open banking. Firstly, I'd just like to ask each panelist maybe just say a few words on what open banking means to them and what opportunities it has opened up for from their perspective. So maybe if we could start with you, David.
What it means for me, I think in very simple terms, I'm a simple man. Open banking, the definition I came up with a few years ago, still holds true. And that is an individual, either an individual consumer or an individual small business, making a choice. They are choosing, they're giving their consent to share the data about their current account with an organization that isn't their bank. So typically, that means me as a consumer making a choice to share my banking data with a fintech, like the ones you've mentioned on the call now, so that they can give me back some value, something that the banks aren't giving. And that's the real simple premise of open banking. It's enshrined in legislation. In Europe, we have this sort of payment service directive. In Australia, you're very fortunate, I think, in that you've got the CDR, the Consumer Data Rights Access, all do the same thing. They allow consumers to share their data with an organization that's not their bank so they can get some real value and put them back in control of the data around their banking.
I think for me, it's all about that power of data and the ability to do payments in multiple different ways.
Yeah, so open banking, what it means to me, I think, is really why it was introduced in the first place. It's about trying to open up competition to third parties. And as David said, to allow a third party that's not a bank to, in effect, be that interface with consumers and do things to help consumers where banks might not have done that previously. And it opens up a huge amount of opportunity for third parties, as I said, to help consumers and drive financial inclusion in ways that it wasn't being driven before. So yes, from a data perspective, being able to share data with a third party to put the consumer in control of their data and be able to choose how they work with third parties, interact with different third parties to ultimately provide benefit to them.
Excellent. And David, if I turn to you, so could you just give us a sense of the scale and momentum that the open banking ecosystem has in the UK and where you think it's going to go next?
Yeah, sure. So as Duncan mentioned, it's quite rightly, this is a competition remedy. So we've always had this problem in the UK, as many countries actually around the world have, in that we have a small number of historic incumbent banks. And in the UK, the competition regulator took a look at this, found that it wasn't competitive enough, and one of the remedies that it put in place was open banking, all the stuff that we've talked about so far in the intros. So we start January 18 with just 9 banks. Right now, today, in October 2021, we have 93 banks who are live providing data. So consumers can go to those 93 banks and say, I want you to share my data with one banks, with Elevon, with whoever it might be. There are 241 fintechs, or third-party providers, we call them TPPs, but there are 241 fintechs in the UK who are live in full production, fully authorized and regulated by the Financial Conduct Authority, which is really important. And they are live with propositions who can consume that data and deliver back to the consumers or SMEs real propositions. And the one that really matters to me, and is the figure that I look for every month in the MI stats that we pull, are the number of end users that are actually using this. It's just past the 4 million mark. It's about 4.2 million users right now. So that's 4.2 individual businesses and consumers who've made a choice to share the data from their current account with a fintech, with a third party, in order to get that value back. And we can talk about some of the great use cases, but that's where we've gotten to. And I think that 4 million users for me is the one. And that's growing every month. I'm very fortunate. I sit at the heart of the ecosystem. I see that number rising. So the number of ASPSBs or banks joining, the number of fintechs joining, but particularly number of end users is growing month in, month out.
And Paul, just to come from your perspective with such an experience in the card schemes, if I was to ask you to maybe take out your crystal ball and say what you consider the impact of payments or impact on payment over the next 5 to 10 years? And what would you?
I definitely think in 5 years that open banking transactions are going to happen, I think, with businesses and consumers without them really realizing it's happening. I think these are going to become embedded journeys, both of things that we do with our devices in store and online. I think every transaction is going to be linked in some way to data or information that's going to happen in the course of something that I will do. I also think within that 5-year time period that we'll definitely have solved some of the industry problems. So think about brands of trust, getting consumers and businesses to trust being able to share data and make payments with all these providers that the numbers of providers that are there today that David's been explaining about, and I'm sure there'll be even more as time goes on in the UK and across Europe. So it's been to have that sort of confidence, and I think that's something that will change in the next 5 years, that you'll have, call it, I guess, a button or brand of trust that will work with all the promises that get wrapped around that. If I was to go a little bit further out with, I guess, my crystal ball, look out 10 years, well, okay, some of these things might sound a bit kind of wacky, but I can see, for example, the power of thought, the power of sound, and the use of AI would get involved in, I guess, open banking. So maybe I'm going to be looking at something and just think that I might want to buy it, and the transaction will just work. Augmented reality, those kinds of things. I think there'll be a lot less kind of physical interactions in what we do to go and do stuff. And if you think about the foundation of open banking and what it builds today with APIs, there's no reason why I can't see things like blockchain coming along the way with open banking, so that whilst you have all these regulated third parties that might be moving or touching the money in some shape or form, I can see players and actors along the way that perhaps might not need to be financially regulated, but will need to be managed down a value chain. And I can definitely see blockchain becoming part of that. Where cryptocurrency might come in, I don't know, we might be trading in one single currency, not worrying about trying to change it up from pounds to euros or Australian dollars, maybe. But I think what's important for the next 5 years is what open banking does and what it offers using those APIs with regulated parties gives a good foundation for whatever that future's going to be. And I guess I'd love to come back in 5 or 10 years' time to find out if any of my ideas came into being or whether I just really was completely bonkers.
Jumping over to Duncan. So Duncan, you built a business basically on top of what open banking has made possible. Be great if you could just describe One Banks and how it utilizes open banking.
Sure. So One Banks was created from the foundation of open banking, not just from what's technically possible, but also what open banking has been trying to achieve conceptually. It's trying to bring the banks together into a single interface to better serve consumers and to help increase competition in banking. And in effect, One Banks brings that to life by having a physical deployment of open banking where people can go and visit a One Banks branch, but still interact with the underlying banks. So we're not a bank, as we said. We just can facilitate transactions on people's underlying bank account. So in Scotland, where I'm from, banks have been closing at a rate of 50 banks per month. And I know that's happening as well in Australia and all over the world. And I think open banking is a great opportunity for, it's made One Banks possible. As I said, One Banks, somebody can go in, they can withdraw money using the PISP open banking flows, or they can deposit money. And the way that we use open banking and the deposit flow is again through that data sharing. And open banking, as I said, has made it possible conceptually and also technically. And as we continue to develop, I think we'll continue to use more and more data from the customer to better serve and to create an experience which is more consumer centric rather than focused around the bank. So instead of having a journey, which is somebody goes into a Santander branch, they'll go into a one bank branch. And the fact that we're agnostic means that we can create a journey which is bespoke to that customer and that consumer needs. Bank branches continue to be unviable as costs of infrastructure continue to rise. So a shared infrastructure solution is what makes sense. And I'm very excited about how we're using open banking to make that shared infrastructure solution viable and also cost effective, both from a transactional perspective as well as a physical shared infrastructure perspective.
Yeah, look, I think it's Mike's one of the favorite use cases that Nuapay is involved with, and maybe ideally, Idea Bridge over to you, David. You've got a unique vantage point at OBIE, and you're at the centre of things. What are the most exciting use cases you've seen so far?
Wow. Okay. I mean, there are so many. Do you know what? One of the amazing things actually is there's all the obvious ones, but sometimes we get to meet people who have a passion in life, something that they want to do, and they come up with really imaginative ways of using open banking to deliver on their things. So those are good. But if I'm going to be okay, I'm going to use 3 examples of really, really great uses of open banking, I think. One that matters a lot to me is that I want to see the open banking rails or the API technology make lives for individuals better, to improve lives. And one of the things that we've seen, particularly through the COVID pandemic here in the UK, has been the ability of open banking connecting people's accounts to providers of service, whether it be debt advice for consumers or additional loans for SMEs. There's always a fundamental problem with that. So I've spoken to debt advice charities who say they may be given 3 hours to work with a client, an individual that's struggling with their personal finances, but they can spend like 2 hours just going through statements and trying to understand what their income is and what their expenditure is. And yet, if they have a bank account, to be able to link the bank account and pull that into a standard financial assessment that in a nanosecond will build all the models, assess income and expenditure, and it allows the debt advice charity to spend all the time, or the majority of the time, actually giving advice, which is what they want to do, rather than working over spreadsheets and trying to figure stuff out. And that's just as relevant for SMEs, for small, medium-sized businesses who have to prove income. That's really difficult. You can go back to historic records, to our tax authorities and others, but often those accounts can be, the record of those accounts can be 18 months out of date. So being able to provide access to the current account to show what's going on right now in that small business's current account, how they've been hit during the COVID pandemic, and allowing them, in this case, government to open up financial assistance. So that making lives better for individuals or businesses is one. The second one I'm just still astonished about. So if I told you that we have a major institution that's opened up open banking payments and is doing really creative, remarkable things, our government, and particularly the tax authority of our government, is the last place you would imagine it to be. But that is exactly what is happening. We helped run a tender for HMRC, Her Majesty's Revenue and Customs, which is the tax authority here in the UK. And they have selected a provider who is using open banking payments. So when you want to pay, when you choose or you have to pay your taxes to the government, there is now an opportunity to pay by bank transfer, and that's open banking in real life. All kinds of benefits. I think Paul mentioned some of them there, but one of the really important ones, and it's a bit of a side benefit, but it's becoming increasingly important, is that when you make an open banking payment, the data around it, so reference numbers, account numbers, and so on, are built into the payment. And so one of the things that HMRC is finding here is that those mismatched payments, so where I recognize that I have to pay, my vehicle car tax, but I mistype either my car registration number or the unique reference number that gives a 16-digit number. If I mistype that, my payment will still go through. So the money leaves my bank account, goes to HMRC's bank account, but HMRC can't reconcile it because the data doesn't tally up. So my name, my address, and the car registration number don't align time. And so it sits in a suspend fund then, and then they have to manually investigate and allocate. Now, I can't tell you how much it is, but it's a huge amount of money of people who spend their time just realigning mismatched payments, let alone the speed and the accuracy of the actual payments themselves and the reduced cost of making account-to-account payments. So that's the second one. And then the third one, which is just a little bit looking forward, as Paul was doing earlier. You can pay right now using open banking. You can make a single immediate payment. So for the very generous lunch that you bought me at Money 2020, Brian, I could pay you back using open banking payments. It would be a single immediate payment, and I can do that now. What I can't do just yet, but will be able to do very soon, will be to pay my utility bill, which is a variable recurring payment, or a VRP. And this, we've just been given the go-ahead to launch this. So then when I come to pay my utility bill, so my gas bill is a lot heavier in the winter time when it's cold than it is in the summertime when occasionally in the UK it's warm. So the variable amounts I'd be able to set, and I'd also be able to have a recurring payment every month. And the beauty of this is that built into the payment flow, I set parameters that I say, you know what, Nottingham Utility Company, you can take a maximum of 13 payments a year. So let's say you can take one a month and perhaps one for a reconciliation. So you can take a maximum of 13. You can take no more than £300 per month. You can take no more than £2,000 a year, whatever the parameters we build in. And those parameters sit with the transaction and therefore protect the consumer an awful lot more. So that, I think, is going to be really exciting. And when you combine that with the AIS, the account information bit, where the utility can see my account and see the performance of my account, it starts in a responsible way to be able to bring affordable lending or affordable payments this time into the utility payment flow. So there are so many on our website. There's an app store. It's not a commercial plug because you can't buy anything from us. It's a shop window, and there are over 100 apps and services that are live to market now for consumers, for SMEs, broken down, filtered, searchable by different product types, just showing what a really wonderfully diverse set of products and services we have in this ecosystem. And as all these speakers are saying, it's just growing month on month, and there'll be something new and exciting next month that I can't even predict right now.
Paul, maybe if you could kind of give us a few thoughts from your perspective on, I suppose, the key attractions to a merchant or a business from collecting this way.
I think you can always go for the obvious and state, as many do, it's going to be cheaper than taking card payments. And I guess for someone that works in the card industry for a processor, that can be kind of a bit of an uncomfortable thing to be thinking about. But if you need to go beyond that promise, because if you're in a merchant's shoes, you really need to think about how they operate. No one's going to want individual credits popping up in their corporate account, what we call, I guess, a fire and forget. You need to think about the whole journey that a merchant's got to go through with proper collections, proper reconciliations, being able to give a flexible solution with open banking APIs. So maybe it's a case of starting the journey off with a PIS transaction, or that then becomes a direct debit mandate, or something that one day might become a request to pay journey. I think there are going to be many things that open banking does and can do, even today, that cards can't. Think about a card payment. The only thing it can do is I guess, collect money from an account, and the hope is that you've got the money there. If it doesn't, the transaction gets declined. That's not how it is with open banking. So if you're a merchant, realizing you've got the opportunity to understand the ability for a consumer or business to pay before it actually happens, that's massively powerful. Price will always be something that comes into a merchant's consideration, because cost is cost, but you shouldn't be choosing something just because it's cheap. You've got to go above and beyond, put yourself in the merchant's shoes, and And that's why I think open banking is so important for merchants now, coming out of the pandemic, needing to rethink the way that they trade and operate, the massive shift to online, trying to resurrect and keep, if you've got in-store capability, keeping that traffic going and that footfall doing. So if you're digitally connected with smart devices, you need a way of connecting that across APIs. That's what open banking does. So from an acquirer perspective, it's very important to provide that diversity and choice to merchants. You can't just carry on as is. That's how I see it.
David just touched on variable recurring payments. Duncan, I know that's a big catalyst for your business as well. You might just describe that and again how it could be applied.
Yeah, sure. So just going back to actually the previous comment about sort of one banks and how we're using open banking. I know David said 4.2 million users at the moment, and that number is growing. And I know open banking is still young. However, there is a large proportion of the population who is at risk of being left behind. And what we're trying to do at One Banks is apply the latest innovation to people who maybe wouldn't otherwise use it. Either don't have online banking, so provide that physical touch point for people to get online, or simply help them understand the benefits of open banking. And we're applying it to cash. And I'll come on to VRP just now and touch upon how VRP will revolutionise the whole ATM industry in the UK. So firstly, I completely agree that VRP, variable recurring payments, is a complete game changer for the open banking payments industry in the UK and will act as a catalyst for mass adoption. In my head, open banking, the PISP flows almost show that what's possible, show that it's cheaper, show that payments can be more secure, and VRP makes it practical, and it enables a huge number of real life use cases, which, as I said, will be that catalyst for mass adoption. So what is variable recurring payments? It's a new way of making payments using the bank APIs, but specifically for recurring payments. So as David mentioned, it could be electricity providers, and I'll come on to explain a few more examples of how this can be applied shortly. So it's defined as a series of payments initiated by that PISP to a specified third party, but where the amount and the number of payments might vary. Previously, with open banking payments, every single payment needed to be consented with the underlying bank, and that's a friction that a lot of consumers won't be prepared to go through, where other forms of payments are a lot more frictionless. So VRP is a way for the consumer to set up a one-time consent, which allows the third party to make those payments on the consumer's behalf within the set parameters, which again make sure that it's done in they protect the customer. So the third party can't take more than, for example, 12 payments. It can't be any more than 300 quid at any one point. So again, there's that protection built into the VRP, which ensures consumer protection. We've spoken about why open banking is fantastic, and I'll just touch upon that because VRP is not a new way of paying. It's merely an enhancement of the open banking payments. So again, it's enhanced security, especially in the UK. We've just increased the contactless limit from £40, £45 to £100 now, which again shows there is risk there in terms of someone loses a card, somebody else can use that card and spend £100 very easily. Or storing card payments online, there's that risk there. Again, open banking payments account to account is cheaper and it's instant. So there's huge benefits of open banking payments. And as I said earlier, VRP isn't a new way of doing it. It just makes it practical. Open banking payments shows what's possible, and it reduces the friction in the experience to make it practical. So use cases that are going to come and what's the potential of VRP? The first thing that's happening in the UK is sweeping. So that, similarly with the introduction of open banking, it's been mandated for the CMA 9 banks, which is 9 of the biggest banks in the UK. And that'll be around the start of 2022 when that comes to fruition. And a sweeping payment is a me-to-me payment. So in effect, it's a transfer of funds from one of my accounts to another one of my accounts. And why would I do that? Well, there's a few different use cases as to why that could be helpful. And again, it's all about helping the consumer which is always the focus of open banking in the first place. So if I'm a consumer or looking to earn more interest, for example, on a specific account, I can use a third-party saving app that moves money from one of my accounts to another one of my accounts to ensure that I get the best rate possible. Another example could be if I'm wanting to prevent overdraft charges, for example, and I'm sleeping one night and suddenly money comes out of my account, which results in me going into my overdraft. Well, if I allow a third-party company within specific boundaries and parameters to move money into that account to prevent overdraft fees, well, then that's very, very easy using the VRP payments. And again, it reduces that friction that's there at the moment where the consumer would have to consent that with the underlying bank. And then lastly, another example could be if I want to automate repayments. If I take out a loan and if I want to automate the repayments, so I reduce both the overdraft fees and the borrowing costs, again, that's a really easy thing that's enabled by variable recurring payments. Going on from sweeping, there's then going to be the commercial use cases, which aren't always me-to-me payments, and they could be a payment from myself to, as Dave mentioned earlier, an electricity provider. So I can allow that electricity provider in the same way that a direct debit could work, so acting as a replacement to direct debit, I can allow that electricity provider to take payments, for example, of up to £100 per month from my account. It could be used for Netflix, signing up to Netflix. And again, it has that consumer protection built in such that if I sign up to a subscription service, I can ensure it's only there for 6 months. So I don't get caught up in that subscription trap that I know I do quite often. And then similarly, it could be used like on Amazon for a one-click payment. And again, it's a secure way of transacting online without having your card details stored on any third-party checkout. And it enables that one-time click to buy something. Specifically in relation to the One Bank's journey, right now we use the open banking PISP flows to withdraw money from someone's account. So just a simple ATM withdrawal. At the moment, someone goes onto their app, they click, they want to withdraw, and that initiates a bank transfer from their account to our account, such that when they turn up to the ATM, they can scan a QR code and they can get the money out. Now it works. Again, as I said, open banking makes it possible. So we've shown what's possible and that this conceptually can be fantastic, because not only can you reduce the transactional costs within the ATM, you can also introduce deposits and recycle the cash. But again, people won't use it if there's that element of friction. VRP allows a consumer to set up a consent such that when they turn up to an ATM and want to withdraw money, it can be an immediate process right there, very similar to what's currently there in the market with ATM withdrawals with your card. But this is cardless, and a lot of people think we'll go cardless before we go cashless. This is a great way for somebody to use what's in effect now their digital wallet, their phone, to withdraw money. It's really quick, it's secure, and as I said, I think it'll completely revolutionize the ATM industry. But VRP is the catalyst that's required. Open banking shows it as possible, but yeah, VRP will ensure mass adoption, and I think be the catalyst for the next phase of open banking for sure.
Yeah, that pretty much wraps up our time. Actually, I can see, lots of use cases, lots of excitement. Look, there's so much going on now. UK, across Europe, and even globally, on open banking. I think we're in the early days of this journey, but plenty to embrace even already, and many more opportunities ahead. So thanks to all the panelists. We've had a really great conversation, and thanks again. And that's a wrap.